Good morning, guys. Can everyone hear me okay? Okay, and I'll have the video up here in just 1 second. Okay, then. Let's go ahead and get started. Good morning. Is the video coming through clearly? Okay, great. Thanks. So let's go ahead and get started. So quite a spectacular day on Friday, and we've had actually quite the move overnight. We're currently trading ES at least at 1788, and we've traded as high as 1792. So a lot of the move that we had late in the afternoon on Friday got re-auctioned overnight. It'll be interesting to see how they treat that same area today during the day session, and I'll kind of go over what the possible scenarios are. Something key to remember for today that should weigh on the market is that Apple's earnings come out after the close, if I have that correct, and I believe I do. That should put a bid underneath NQ. Now, that bid may take place early in the morning where they come in and step in underneath and drive NQ up, and ES will most likely follow in that case, or they could wait to the last half hour and then put a bid underneath the market. It is, excuse me 1 second here. I got it. It is important to remember, however, that once that bid comes in, it could cause some pretty severe short covering in NQ, if only temporary, something that looks similar to Thursday afternoon's short covering. So let's go through the possible scenarios based on where we're opening, or at least indicated for opening, and then I'll go through the various charts for those of you who want to drop off and get ready for the day on your own. So let's start with ES. ES is currently trading 1788 still-ish, right? Which would put us right in this top of this support area right here. Overnight low we were sitting right here. So the key that's going to be, first of all, in terms of looking, are buyers are in control or sellers are in control? The first question is, can we hold gap fill in Friday's low without testing Globex lows? Assuming since Globex lows came extremely early in the session when it's very, very thin, early Sunday evening, if we came in and we tested, I would expect to have responsive buyers first time in. The question is going to be, what is the size of the rotation based upon where we're opening? If we can get a 6-point rotation into this zone, I will take the first trade into this zone. Again, assuming that we don't have indications of an open drive lower. If we can come in and we can hold gap fill, the likely scenarios will come back up and drive for a test of the overnight highs. Above overnight highs, if we can get above the overnight highs, I would think this 1799 to 1801 area would get retested either today or tomorrow, one of the two, but I would look for at least a retest of the 1799 to 1801 area. It was the top of the prior, if I've got it right, and we'll look in a second, it was the top of the prior balance area, and I would expect a test. Above 1801, if we can get above and hold, I would expect a test of Friday's highs above here. But that's quite a stretch, and I'm not sure that we'll actually be able to get that today. With the proper rotations, given this scenario that we hold Friday's lows, I will be looking for responsive sellers at first time into the 1792 area. Again, this assumes we've tested the lows, and at initial resistance. 1794, 1796, I'm going to have to watch the price action there. And the reason why is if we break out over the overnight high, there's a potential for a good squeeze, and I would like to see tick divergence or watch the price action here. So this zone won't be automatic for me. This one will, and this one will, in terms of taking trades today. The other scenario that we could have, again, that would give us ultimately an upside scenario would be that we open again at that 88. We come down and test gap fill. We get a little rotation out of that. We could still get our 2-point rotation. Then we come in and break and go for a test of that Globex low and or lower. The point is not whether we test lower, but what I'd be specifically looking for is if we can regain Friday's lows again and hold above. It would set up, again, a squeeze back to the upside, certainly to the overnight highs, and then possibly into that 1799, 1801 scenario. All right, key in this, we'll be looking at time frames. After 9:30 a.m. and certainly between 10 and 11 a.m., the odds of having a reversal increase significantly, right, where we get squeezed up. It would have been really nice if we could simply panic down to this 1770 area this morning, but it didn't happen. So I'll be looking at time frame relative to pushing back up to the upside. If we get back above, getting positioned for a trap trade is difficult because you can simply get the trap trade and then we can either fail to the downside, or we can kind of give a head fake down and then push up. But it can be enough of a head fake down to push you out of the position. It's hard to position those trades. The way that I try to position for a trap trade is if I can get position lower and I can leave a scale, and then I can identify that we have a potential for a trap trade, I'll leave it knowing that we can push up to the other end of the range, which is currently 1792, and then an extension of the range again brings us to 1799, 1801. So those are my upside scenarios, and this scenario, by the way, would simply shift down. If we break Globex lows and we come down for a test of initial support and we get a rotation up to Globex lows and then we hold above Globex lows, right? That could easily, again, push us back up. Certainly in this case for a test of 1792, if we get that. That would be the other scenario for a trap trade setting up. Again, if we got this scenario, by the way, where we break Globex lows, this is a zone, but I think I would rather opt, again, this zone, I'm going to have to watch the price action in this zone. It won't be automatic for me. This one will. If we get an extension down into this zone, I will take this zone first time into the zone. The only way that this zone right here sets up for me is if we open, let's say we open so that the Globex low will not be a trade for me. In other words, it, for whatever reason, would not be a 6-point rotation, then in that case, I would adjust down to this zone for trade location first time in. But it's going to have to set up so that this is exactly a 6-point rotation and that there's no stopping here at the Globex lows, right? We have to break right through it. Otherwise, I will not take this position without additional evidence. Additional evidence will be tick divergence or price action based on whether I see the dome pausing or not. So this area will be a little tricky, but really if you simply decide, right, if it busts through, and if you simply make a decision that says, unless we just simply slice right through Globex lows, I'm not taking this zone, it makes it much easier to reconcile this. Also combine that with a minimum of a 6-point rotation. Let's discuss the upside scenario with the assumption of that we're not breaking Friday's lows. There's several scenarios in that case, right? So the first one is obviously open drive higher. I think that's unlikely, but it's characterized by exactly what we had in reverse on Friday morning. So we'll take a quick look at that. When I'm always talking about the first 3 bars, right, first 3 green bars, first 3 red bars, this right here, and you can go back and look for yourselves, go look at the first 15 minutes, 3 bars down, or the inverse, 3 green bars up, easy for me to say. That is my first hint, right, that we are having a potential trend day. The other indication is that that first 5-minute bar, the high, if it's a trend day down, or the low, trend day up, won't be penetrated. So I would print a picture of Friday. It's a picture perfect trend day down. And if you flip it upside down, right, that's a picture perfect trend day up. It's exactly what they should look like, and it just simply doesn't get any better. I would journal about it and write it down in the notes. So going back to what we were talking about, barring a barring an open drive higher, right? If we open 1780, looks like we're trading 1787. We come in, I would assume we're going to come in at some point this morning for a test of the gap fill. If we don't, it would be an indication of strength, right? So we're going to have half gap and gap fill. My thought would be that we are going to test the gap. If we do not test the gap and we get half gap, it would be an indication of strength, in which case I would look for a test of the overnight high. I would expect responsive sellers first time into their overnight high. However, I would expect if we don't get this gap fill that we could easily come up and test this 94 to 96 and 3/4, followed by 1799 to 1801. I will take a shot at the short side first time in, and really at each of these zones above, I will take a shot to the short side first time in, assuming I get my minimum of a 6-point rotation. And that's really my upside scenario. The other one covers having first more of a downside momentum. Let's discuss one other possible scenario here, right? We open, we kind of chop around here. We get half gap and we come up into the overnight highs and we break the overnight highs. A warning sign for me that we're going to get a test of these lows now would be a break back below overnight high, and that would set up a test. At that point, we're either going to break back above. If we fail to break back above, that could bring a test of gap fill and Friday's lows, followed by Globex lows and lower. Now, this scenario, right, in order to get a big push lower, really, in my mind, needs to come before 10:30 a.m. or that scenario shifts all the way over to 1 o'clock in the afternoon, possibly lunchtime, right? But usually lunchtime is chopped, so closer to 1 o'clock in the afternoon for a downside test. Keeping in mind that we had the Apple earnings coming out after market. If we had, this is a very common pattern, right? Where we open, we test higher, then we break lower, and we kind of have one of these backside tests. If you look back a couple days ago, actually not even a couple days ago, you go back to look at Thursday, where Microsoft's earnings, I believe, were coming after the close, and we had a pattern that looked like this right here, right? That was both, and then NQ was even more exaggerated, right? NQ came all the way back up to the highs. So as we're pushing lower today, if we push lower, which would be beautiful, do not be surprised if we get a rotation all the way back up to the highs, close at the high of the day or the middle of the day. And this is a typical pattern, even in bear markets, right? We'll open, attempt to push higher, then we'll come down, we find responsive buyers, and then we tend to kind of come up to 1/3 to 1/2 back. Then in the afternoon, right, we get one of these three choices, just like we did on Friday. But the push back up after 10 a.m. is really normally a pretty good bet, even on a trend day down. There are exceptions to the rule. It's an odds thing. It's not a guaranteed thing. So I will be looking for this pattern to play out this morning, particularly after 9:30 in the morning. I'm not expecting an open drive in either direction. The best possible thing that we could have this morning in terms of setup, I think I've gone through most of the possible scenarios, but the nicest thing that we could have would be an attempted push higher. Let's say if we open 87, attempted push higher, we fail, we don't get to overnight highs, and then we come in and we get gap fill. We find responsive buyers at gap fill, and then we push from gap fill all the way to overnight highs. That would already be a nice trade by itself. And then if we can get overnight highs to come up for initial resistance, and then we find responsive sellers there, that would really be my kind of dream scenario. But often I don't get my dream scenario, so we'll just see what the market sets up for us. Let's go look at NQ really quick. So the last piece on figuring out ES, right? If we look at NQ's trading, and again, I did this in the trade review on Friday. I haven't had time to finish out the NQ chart, but if we look, obviously I need to add a zone here, right? There's an open gap here. This was the high, right? You'll notice that we attempted to push back up off of, we broke. You'll see right here, this was Thursday's lows, excuse me. We pushed down below, and the key to that was Globex lows were above Thursday's lows. So when we pushed back below and then we pushed back up, this was the test. The test failed. and that's what triggered our downside move. You'll also notice at 10:30, that's where we got the responsive buyers. We pushed back up. My hope was that we were going to push all the way back up into the close. That wasn't to happen. We had a trend day down. We're currently showing open at 35.38, which puts us actually just off of Friday's lows. Okay, so the problem with that is ES is doing much better than NQ is, and the issue with that is that NQ has been our leader the entire way up, almost every single day before we start setting new highs. NQ has pushed us there first, so we're going to need to see NQ hold above Friday's lows. If it breaks below Friday's lows and we get a test like this, and then we fail to hold those lows, right? Break below, come back up, and then we fail to hold these lows for push higher, I would expect ES to at least get a test of Globex lows and maybe even push lower. So once again, NQ has kind of been calling the tune the majority of days. I would say 90% of the days. Occasionally it's been ES. Majority of the time it's been NQ. I will be keying off of NQ, particularly in the morning, to look for trade direction. In addition, I'll be watching for NQ to get a push. It'll be hard for me to imagine not getting a good push to the upside. So from these lows, I will be watching. If we can hold these lows, right? If we come down and test, we open, we come down and test, we fail to break below the lows, and we hold above Globex lows. And Globex lows are currently at 35.20. So that puts us right here. Again, I apologize, I haven't had time to finish the chart. If we come in, if we can hold this, right, obviously that would set up a very nice upside move. And if we get the scenario, I would expect responsive sellers at each of these points, right? I'd be surprised if we get back up to Friday's high in the morning session, but anything is possible, right? If we break below the lows, you have to watch that we come down and test Globex low and then get a trap trade set up right back if we trade back above and hold above Friday's lows. That would set a push to the other end of the range. Currently, overnight high, let's see where we're trading on that, is 35.45. That would set us approximately right here. And I would actually look for a push up. Now, one of the keys to NQ that I'll be looking for is I want a fat rotation, right? If I'm going to take, let's not call it aggressive, but less than aggressive trade, right? So if we'll look, 35.93, before we got a rotation on Friday, a good rotation, it went from 35.93 all the way down to 35.53, which is where I went long. I would look for at least a 30-point rotation. If I'm going to counter trade this back to the downside, considering the stretch that we've had, I would like a 30-point rotation from where we open. So currently, that would put us at 35.39. I add 30 points to that. That's going to put me at 35.70, or approximately right in this neighborhood. Again, I haven't been able to finish the zones, but somewhere between here and here would be a really nice trade location for a push back to the downside. Conversely, right, if I'm looking lower, if we open up that 35.39, that opens up 35.10 to 3500 area right in here. 3500 exactly would have us a little stretched, right? And I would look for a responsive push back up. If I'm not getting these extremes, everything else, the way I'm keying off my NQ trades quite often is off of my ES zones. It's not perfect, and it requires a wider stop, meaning I usually use a 10-point stop on my NQ trades. People hate that. They want to be able to try to pick it off within a few ticks. That doesn't work for me consistently, and the 10-point stops are more than easily absorbed when I have big days like I had on Friday, where I'm getting scales at 10 points and 16 points or more. Those are just monster days. And like I said, my win rate is well above 70% on NQ, so 10 points it is. For everything in between, I'll mostly be keying off of the ES zones themselves today, along with tick divergence. That can backfire. They don't always trade hand in hand, just so you know. That's the executive part of the summary. I'm going to check to make sure. Okay, so I'd like to go over actually the volume profile charts and then the tick charts really quickly. Okay, so on ES, to get a bigger picture look, right, you have to bring in so it doesn't look so catastrophic, right? If you only take a short look at this, it would appear as if all is lost, that we've had some kind of major destruction on the chart. The only thing that I see that's been significant here is that this trend line, and again, trend lines get broken all the time, right? But we had a trend line sitting right here, and we stopped right at it, if you can see that on Friday's close, right at 1782. I'd want to hold above 1782 to make this work. Now, there's a bunch of possible scenarios that could play out with that. We could easily simply trade below, retest that 1760, then recapture this, right, and push all the way back up to 1820. I would not be shocked to see us at 1820 sometime this week. I'm not saying it will happen. I'm just saying it's within my field of range, right? It would make sense to get a backside test at some point of this balance area, right? Also, we're simply trading into the bottom end of what was previous balance, which was right here. That would put us at roughly 1764, 1765, right? And the majority of the closes when we were trading in this range were either between here and 1780, or the other ones were all pocked, really all the way. These were all pocked until we get to the very bottom. Prior to these few days where we closed below these 3 days right here, all the closes were between 1780 and 1800. Pushes lower were consistently met with responsive buyers back to the upside. Not on every occasion. Occasionally we closed just a hair below, but most of these were pushes back up into the range, and particularly this push right here. Obviously, we pushed all the way to the other end of the range. Again, I'm looking for this pattern to play out a lot as we try to figure out whether the market figures out whether it wants to hold this area, right? What would show significant damage? Well, if we get below 1780, right? But really the key is getting below 1760 and holding. Now we would have damage. We have two distinct balance areas and trading ranges that have been broken. This would then become the top, and 1740 would become the bottom. But keep balance. These markets don't go straight down. Even ripping markets don't go straight up. Markets simply correct. Bull markets correct very, very quickly, and they're scary, but they provide lots of trading opportunity. So as of now, as long as we hold and close above this 1782, we're fine. Even closing below 1782, right? You could see a scenario where we could still come back up, recapture this trend line, and push all the way back up, at least, right, to this 1800 area for a test. Now, the trading range from here can look like this. We could either sit here and balance between 1780 and 1800, right? But an extended range, 40 points, right? The range from the top here, this is 1845. The low end of the range was roughly 1812. That's a 30-point range. So if we get a 30-point range again, that could easily put us at 1805 down to 1775, right in this area. Let me clean that up so I'm clear about that. The 30-point range right now will put us at this 1805 all the way down to 1775-ish, okay? And we just pick up the old trading range that we were in before. Highly probable. If you want to look at what a larger term breakdown looks like, go look at the gold chart from early last summer, and you'll see the pattern went like this. We broke down, we came all the way back up and tested, we came back down, up, tested, down, up, tested. So we shook out every short that we possibly could before finally breaking lower. And that was about the third test, and it took about 2 or 3 months to get a significant break. And until then, we had these fantastic trading ranges. I would not expect to see anything different from ES. Markets tend to not crash from highs. They tend to crash from lows. Let's go look at NQ really quickly. Sec. Okay, NQ, let's bring this in and get the same look going really quick so we know where we stand on this. Okay, the first thing that I want to point out on NQ is all we've done, we have a possible scenario where we broke out, right, and we failed the breakout, and we've just pushed back into this range. We haven't even done this isn't an established range. This is a couple days above the top end of the range here. Okay, so we haven't done even as much damage as we have, and if you want to use that word, in ES, right? All we've done is fall back into the range. 3,500 quite clearly is the bottom end of this immediate trading range and pushes us in to the top area of the prior trading range, right? The bottom of that range is all the way down here at what looks like 34.30-ish, roughly. I could push it out to get a better definition, but it doesn't matter. The bottom line is, if we look trend-wise, it's still holding its place. Okay, once again, we've held. Even if we break that trend line, right, it's not uncommon to see us break, come back in for a backside test, even push a little bit higher, and then push lower. But this backside test would be expected, and I would be very cautious. I would not want to get caught short and getting crushed on an upside move, right? Markets don't go straight down. They don't go straight up. We have examples, right, where they tried to bust zones. This is Fed day, so I'm not sure that's the best example there, but we have had examples where they try to bust to the downside. We can see this not too long ago, right? I'll pull this over. Okay, again, big nasty liquidation day, right? Followed by a partial recovery. We balanced for 2 days after that, right in here. Then we pushed right back up to the top of the range. Even then, it looked like we had a failed breakout, pushed back into the range, and then we took off, okay? No damage has occurred. Even here, if you look going back into October, right? We had one nasty day of long liquidation. The next day balanced, right? We pushed in this pattern right here, this day, if you go back and look, it looks like it's October 7th, 8th, and 9th, or however that sequence fell, if we fell on the weekend, right? We had a day where we had trend day down. Following day, we opened up slightly, pushed lower, right? And then we came back around for a close like this. Okay, and that day, whatever date this is right here, somewhere between the 7th and the 14th, highlights it perfectly. And then if you look overnight, we clearly got some kind of news, right? You could have even said, well, this looks like what Apple might look like. We gapped up, we went, and then the following day we had a pattern that looked like that. And we started this uptrend, right? I would not say that any significant damage has occurred yet. Don't get overly bearish. That would be the end. Alan, do you trade within the first 30 minutes? Sometimes, but I generally don't call those trades out. They're aggressive trades. I have to have a 6-point rotation to call a trade out. Trading in the first 30 minutes can be very, very difficult. I do have certain areas where you got to remember, I've been trading for over 20 years. I have trades that I'll take, and I have scalp trades that I'll take, particularly in NQ, that I won't call out. They're simply too aggressive, and it's too hard to communicate the idea extremely quickly. What I'm looking for, just so everyone knows to set up, is I'm looking for 1 to 2 trades a day that give me 2 points. Those are my absolute largest trades size-wise that I put on. Everything else has smaller size when I'm trading. And if I could trade nothing else, what I'm communicating to y'all here in terms of the zones, the 6-point rotation, the support resistance, and the targets and the stops, that's exactly what I'm trading. And if I could trade nothing else, I had to choose one trade, that's all I would trade, because that provides stability, reduces anxiety. It's easy to spot on the charts, and it is highly reliable, and lets me increase my trade size on a regular basis. So for smaller accounts and smaller traders, that forces me not to have to look for more trades or more aggressive trades. Instead, I can focus on increasing my trade size as long as my wins stay in that 70 to 80%, 70 to 80% range. I can simply keep adding contracts, and that usually resolves the problem for smaller accounts where I'm not making enough money. If you can just be patient and build through that beginning part, eventually you can get to 4 or 5 or 6 contracts or whatever your nut is, right? But if you're trading 6 contracts and you're taking down 4 points a day, right, that's $1,200 a day. I don't know how much money someone needs in terms of their daily expenses, but that would exceed the vast majority of people I know. It's a lot of money, and it doesn't take that long to build to that contract size. It might take a couple months for some, but it's certainly attainable. And obviously, I've had clients far exceed that by miles and miles. And then trading becomes a much easier occupation at that point, much more relaxed. And then you can start looking for the aggressive trades, and you can take them with smaller trade size if that's what you want to do with your time. So anyways, guys, that's all I've got. I hope everyone had a great day. Has a great day. Oh, I'll take a look at the ticket charts real quick. I'm not even trading. I've already run over as is. Just really quickly. Let me drag these things over. I'll give it a second to line up on everyone's charts. But first, looking at the 5,000 tick chart. Okay, so we're quite clearly in a downtrend. And let me make sure this thing is refreshing properly. And let me take a look at my tone. Okay. Okay, so we can see the gap there. The reason why I keep this scrunched up is specifically I want to see where the major cluster of support and resistance is, right? It's a little bit different way of looking at it, but you can see at this 1799, 1801 area, right? Even without, well, there goes my chart. Even without looking at the volume profile, you can see that this is just pulling a ton of data, so it's going to keep doing this. We're pulling a ton of information here, but this 1801, 1799 area is important. And down below, I can get to it, right below here, really what I would rely on, because this was so thinly auctioned, is both this area right here, because there's not much information to be had here, right? So just below 17, just at that 1770 area, right? And then the top of this area right here, and then this area right here, all of these, right? Obviously 1781.50, that was right here, we re-auctioned that. So just below this area right here, and then below at this bottom of this area right here, just below 1770 would be areas where I would look for points of inflection. It's a different way of looking at the market, but it gives us much similar information, right? That's the bottom of that zone. Just below 1780 is the top of that zone. And so we actually have enough to lean on that I would expect to find responsive buyers here. If we didn't get that, I'd be shocked. By the way, NQ's pushing lows right now, 35.34, so just a heads up on that. We're not getting the responsive buying. NQ's only up 3. We need to see that it holds the test of Friday's close, right? Otherwise, we have a new situation on our hands in terms of the scenario could open up to a lower testing. Also important to notice, even though we are pushing towards those lows, we're holding well above those lows on ES, trading at 1786 here. So just something to note. Looking at the day time frame charts. Okay, so clearly, before we get any upside movement, and I would have this drawn out, right? So that trend line has to break. And if we match that on the downside, it's going to look something like that. So, and by the way, when I say trend lines break, this is a perfect example. They break, gets recaptured, pushes to the other end of the range, right? That's our trading channel that we're in right now. We're at the very bottom of that trading channel, right? 35.50 would push us maybe a little bit above. 35.55 would push us to the other end of that range. That's easily attainable from where we're at. We're at 35.33 right now, right? It's only a 20-point rotation, so quite easy to see us pushing up to the other end of the range. On ES, let me see here on the daily. There we go. Okay, so we can see this is the top end of the channel here. It still has room up. We're clearly going to have to break above this 1788 to get room to the upside. And really, I'd redraw that channel now to look something like this. So that's really the top of the channel now. This is a longer channel, so I'm going to leave it up here from a larger time frame. And if I get a parallel on that, so that's the bottom of our channel now, right? And as you can see, we have not tested that, but clearly we need to get above this 86, 88 to get any push higher. And what I'd be looking for is if we can get a push above, right? Again, this is just a different way of looking at it. We haven't hit gap fill yet. That's all the way down here. So what I'd look for is to get a trade above, right? Instead of being forced to chase in on it, what I would look for is a rotation back down. It could either rotate from here and go higher, or it could rotate down to here. There's nothing that says it just can't get on the top of the channel and rotate down like this. But if it's going to break for an upside test of this area, what I would hope to see is a clean break up and then some kind of retrace either back to this point or retrace back to this point. Again, I would line it up with the zones and then look for a push higher to that 98, 1800. That may not come till Tuesday or Wednesday till we get that. It's hard to tell, at least in the initial going. NQ is weak out of the gate, so ES is going to struggle. It'll be interesting to see, right, if we get a break below Friday's lows on NQ and ES holds, that'll be an indication that we may be able to take a trade back to the upside. It would be a sign of strength. But right now, NQ is actually gone slightly negative on the day, and we are retesting the lows from Friday. So let's see where it goes. I would expect them to try to step in here. Again, ES is not following it to the downside, which is very interesting to me. So we'll watch and see who has the pull. But NQ has led this market all the way through. Anyways, guys, I think that's all I have. I'm going to see if there's a quick question or two. Sure. Yeah, Daniel, we have. I'm just keeping an eye on it. Like I said, we'll see what the market does today. I'm not in an overly big rush. Just let the rotations come to you. As you can tell, I'm not taking any trades right away. By the way, I will be out of the office after the first hour. Today I'll be on mobile, and I'll fill in as best I can. I don't expect to be back until very late in the afternoon. But you should be able to still send me messages if I can look at it. This is to my coaching clients. I'll be able to respond as best I can, depending on connectivity. Anyways, everyone have a great day. Remember, our objective, 1 to 2 trades a day. 2 points is all you need. 2 to 4 points is all you need to build the account. Everything else is just gravy. So there's no rush. There's no rush. Anyways, talk to you later, guys. See ya.